I know you have heard the stock market is not the economy, right? Wall Street is not Main Street. Well, I'm going to disagree with that. So just take a look for a quick second, and I will do a better job of this a little bit later, but I was playing around with this weekend and this morning. You know my big picture ratio analysis stuff that I do, right? So this is on a quarterly, and it's SPX really divided by TNX. Okay, so we have a quarterly look at how yields impact really the major market of the world. And you can see from down here in the 80s, when inflation finally peaked and rolled over, we started a regime of this risk parity. Bonds started going up, yields started going down. As yields started going down, the S&P started moving higher. And yes, we've had some fits and drama, right? That's the great financial crisis. This is 2000. We've had the great financial crisis, which is right here. We had COVID, we had repo madness, and we had COVID, massive printing, right? But take a look at this very, very long trend line that has busted. Okay, so I have contended that this is the reason for the season why this trend in moving higher in NASDAQ or SPY is done. And I'm going to be tested, there's no question, but this is a trend line break. And I feel very, very strongly about trend line breaks, especially if they're on a long time frame. Now take this very basic premise that yields are moving higher for longer. Okay, that we're in an, if you are believing that, which is my baseline bet, inflation is structural, wages are sticky, unless we get a hard landing, recession, all that jazz, then this is broken. Market is done going up, right? So that's my baseline bet. Yields are going to go up and markets done going up. Big picture. Nobody believes that, but that's what I got right now, just based on this. Here's that 3 month again. Here's that 3 month. Here's the 1 week. And then I break it down to the 1 month. And then here's the 1 week. You can see that this is basically just the same exact picture, right? Trend line from the 80s to the 2022 break is right here. That's very bearish. Now we've bounced, I don't know if you can see this, but we are bouncing into the underside right here, this area. And maybe, I'm not really expecting too much, but maybe we get above and we trigger back inside this channel. Remember, this is the same channel, maybe. But that to me was a very, very significant head and shoulder event, which I caught early. That's a shoulder. Am I in capital? Yeah, I am. That's a huge head. And this is a shoulder. All right. So just to kind of put a little bit of pattern recognition in this play, we got a massive head and shoulder, and then it breaks down. It breaks a trend. And now all we've been doing is kind of digesting this breakdown in bonds and stocks in 2022, a historic breakdown after 13 years of outperformance by NASDAQ and the death of risk parity and deflation of wages, right, ended with COVID. We get this. Maybe we bounce into this underside, and I think that's basically it. This is what it looks like on a weekly, which is also something I like to play. But this is basically where we have this absolute resistance. And you're probably saying, what is this? Well, this is, I can't even show you here, the purple. That's what I want here. Here's resistance. So if we get above this, right, if SPY actually moves higher and yields move lower, then, we could very likely get back above here and I will reassess. We're back inside the fold, so to speak, right? Is that really going to happen with inflation reemerging? Yeah, not a lot of people believe that. With wage demands growing. So we need an event to trigger getting back inside. And that event would be recessionary, right? Which would cut yields down to size, but it would also cut the market, the SPY, with earnings compression and all that. So right now, this is to me so busted. Okay, now let's go and do something a little bit more fun. Okay. This is a chart somehow put in your head that I've just done, SPX to TNX, the exact same thing I just showed you here and kind of, walked through, all right? This is just side by side, very, 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 very aligned because I want to show you something. This is the 1 month, that's the 3 month, and you can see this head and shoulder, okay? This breakdown, and this is the major trend line from the mid 80s. You can see the breakdown, you can see a bounce, and I don't know if you can see this, but I've highlighted 2009 when this ratio was about here. Either of these lines, doesn't matter. Doesn't matter. But you can see there's a whole bunch of room lower, which would basically translate to lower SPY, higher yields, right? In a nutshell. It's not a direct line. This is on a monthly. That's a 3 month. It gives you that same kind of look. This is what happens. We go sideways, we break out, and this is called a fake breakout, fast failure. And now we go sideways. This could happen for years before we come all the way back down to test this 2009. So why am I showing you why I'm bearish? If not to say the market is the economy, that's my end point, because I took this same 10-year yield and I applied it to US government debt. So US government debt, take a look at this. This is on a 3 month, this is on a monthly, has been growing since the exact same time, mid 80s, with the exact same picture, like exact. So we've broken this trend line. They're trying to, get market to land softly, but this trend is busted. That's all it means. So now debt is quote unquote, right? With the premise of being inflated away. I don't think they're going to let inflation go down too low because this is actually exact same pattern as this one. Exact. Like, I can't even tell you how close they are. So all I did was take a ratio of SPX to TNX and take a ratio of US government debt to also the 10-year, and I get the same pattern. They're both bearish. The trend is broken. Unless we have some major event and they trigger this liquidity from stimulus and cutting rates significantly, I don't think we're going to get back inside that channel. I don't think SPY and NASDAQ, big picture, because of this, are going to have a successful time in moving to all-time highs. That's it in a nutshell. And then if I show you my SPX to the dollar ratio, which I also love, right? That's the dollar, but that's not, hold on, give me a second. This is SPX to the dollar, because we know that the dollar higher is a headwind to markets. And this is popped above a particular trend line, but it is not confirming to me either. I think we're going to actually come right back down and break below. So it hasn't yet, not at all confirming, but I think this is still at risk of coming back down, dollar higher. And you know how I feel about the, let's get this, NASDAQ to, yeah, Apple looks the same way, also busted trend line, and that's on a monthly, that's on a weekly. Here's NASDAQ, right? This was the big picture back in January when I said this looked like a head and shoulder forming. Literally in January, I said this looks like a fabulous left shoulder, head, and then right shoulder. And then, of course, this is on a weekly, that's on a monthly, but it definitely broke down. And here's that trend line, right? From all the way back to 2009, and we busted it. We hit another little trend line and bounced right into resistance. So I said recently when I was going over this on a tighter time frame, not a monthly, this has already worked perfectly. This head and shoulders rotation between NASDAQ and SPY has already rolled over. It has not only followed through in 2020, but it even broke down. All we're having right now is a bounce into resistance. There's nothing in this chart that tells me this is going to get back inside the channel. So in fact, I think we're already hitting resistance and fading. We might have one more tag but I think we're going to get rejected. So what happens at that point? We come back down, NASDAQ and the like. So that's why I'm still bearish. I just think that this trend of rising government debt, rising S&P market at the expense, basically, or on the heels of, or the reason for the season, falling yields is done. I just see these as absolutely identical charts, and there's nothing here that says we're going to get back in to the fold. In fact, the opposite. I think this is a gorgeous example of a blow off top, fake breakout, fast failure, and now we're underneath a trend line. So I'm in absolutely prove it mode. Now I can drill down to do this, short duration stuff. But when everyone asks me why I'm so bearish, so bearish, it's because of these charts. I have a very, very strong intermarket tell that says SPY is also done going up, but rates are not. So I got to work with that. Everything else is on a much smaller time frame. But big picture, you're asking me about this kind of stuff, right? You're saying, what about the call that market, for me anyway, is very much a fake breakout, fast failure, that global debt, US government debt to the 10-year is very much a precursor to lower forward returns. Unattractive risk reward. That's all I can do. Hope that makes sense. Snyder, that's his name, Jeff Snyder. Thank you very much. Big brain, but not a market timer, right? I'm not a big brain, I'm a market timer. Yes, he's 110% recession camp. And I don't have, like I said, any quick, shallow, deep, long recession. No idea. All I know is this got me into that short call for bonds and stocks. Who else had that? And this is telling me to stay out. It's just not enough risk reward. Can we bounce up into this area? Of course. That's resistance, right? Right up here. Wouldn't surprise me if we got, Bank of Japan put a bottom in everything. Dollars, dollar swaps with SNB and treasury liquidity and all this stuff. But I just don't see the precursor of getting back inside this channel in any way, shape, or form being easy. I can see sideways. I can see a lot of sideways, right? That was sideways, fake breakout, fast failure, broke that trend line. I just see lower. That's government debt to three to the 10-year. And this is the same. This is just, we're done. Fake breakout, fast failure, sideways. Look at this sideways. We can absolutely go sideways for a while. Or we can just crash right back down. So that's not my game, the recession timing. But attractive risk reward for anyone who's trend long. I got a whole list of plays that are working, right? They're all value cyclical names for the most part, energy.